All right, how's it going, everyone? I'm going to be doing a breakdown, a complete strategy from A to Z, beginning to end. Everything you need to know about the strategy and how I use it on a daily basis, how I use it for market open, how I use it for Asia session. So it's going to be a little bit long, maybe like 30, 40 minutes, which is usually how long my videos are, but just grab a pen and paper, somewhere to write on, because if you're watching this, no more trading with candlestick patterns, chart patterns, no more trading with random support and resistance stuff. We're going to be just you just watch where your mind's going to be blown, all right? Let me get this all set up right here. All right. No cuts, no nothing. I'm not cutting everything. This is the two trades I took this morning. I wasn't able to live trade with the people in my Discord, so if you guys are watching this and you're in my Discord, I'm sorry. I had a doctor's appointment and an ultrasound because I am going to be a dad soon. And so I had to do a doctor's appointment and then she had hers. And yeah, wasn't able to trade, but I did bring my laptop with, and I took these trades in the car and in the doctor's office. So if you're not in the Discord yet, please join. You can trade with me live basically every single day unless I say I can't. And yeah, that's about it. Let me before we get in, I'll show you guys like my P&L for this. This was the trade we took today, starting off March. We are $2,000 in profit out of the three we need to make to pass this thing. And on Top Step, let's just break down that before we get into like going over the whole strategy. I just want to show you. And then on these evals, I have three 50K ones. And we are, oh my, what? I didn't even know we were in this much I thought we were only in profit about $400. I guess we're in profit about almost 1,000 on this account, I guess, times three, because three 50K accounts. But anyway, let's get into breaking down the strategy. And then at the end, I'll come back to these trades and show you why I took these. So, all right, it's very simple. And if you're trying to learn trading and and it isn't simple, they're fucking lying to you. All right, it's not complicated. The only complicated part in trading is being strict with risk management and not being a dumbass and over trading, risking all your fucking money. It's really just risk management and psychology at the end of the day. You've probably heard it numerous times all over, social media, but it's very true. Strategies are not the hard part. This is easy, but this is the most mechanical strategy, meaning you are going to be looking for the exact same thing every single day, no matter what. So if you fuck it up, that is on you because it's literally the same exact three entries you'll be looking for, the same exact setup. Every single day, you're just going to be looking for a price to be returning to three key levels and looking for three different entries in the direction of where candles are going. It's very simple. The only thing that'll complicate it is your brain. So let's get into this though. I'm going to go on the 5 minute just so we're on like a higher time frame here. Sorry, I'm pausing the video just real quick to let you guys know that I'm doing a live trading example at the end of the video after I'm done explaining and how to go through everything. So thank you again for watching. Hope you enjoy. All right. So first off, let's just do like a bullish, because usually everybody is good at trading, or not good, but everyone, likes a bullish market. We'll just say that. Let's even make this like how this would normally look too. Not perfectly, just like three same size candles or something, doesn't really matter. But let's say And this can be any time frame you're wanting to trade on, all right? This can be, I trade the 15-minute, but you can do this on the 1 hour, the 4 hour, the daily, the weekly, and I'll get into that later after I'm done with this. Looking at this is just determining the trend of the market and which way it's headed, all right? Keep that in mind. And sorry, I did go out. I'm going to be a little bit stuffy. I went out and drank. I drank like 2.5 glasses of wine because my girlfriend's mom wanted to go to Running Aces, and then she bought me wine. So sorry if I'm a little bit stuffy. That's just kind of what happens if I drink. And usually I don't drink. I don't want you to think I'm like some alcoholic, but like fuck. Come on. All right. So let's just say let me write this down because I want so you can write this down. This can be either these 3 candles you are looking at here. This can either be the 15-minute. This can be the 1 hour. Not the 30-minute, not the 2 hour. This can either be the 15-minute, the 1 hour, or the 4 hour, or the daily. You can do the weekly too. I would just put that in there for reference if your patience is that on, that key to where you're taking maybe 1 trade a month, but or less, but you'll get this wow, that's some crazy stuttering. But you will understand this later. So this can either be 15-minute, 1 hour, 4 hour, daily, weekly candles. And what you are literally looking for is, let's say, and you always need 3 candles because one is the start of a range, the second is a breakout, and then the third is the retracement and the push. So you have, first of all, this candle range. Let's just pretend that these candles aren't even here, but you have this one right here. Pretend like there is literally no candles on the chart at all besides this one here, from the top wick to the bottom wick. This can, like I said, this can be a 1 hour candle, the 4 hour, any of these. I use the 15-minute, so I'll just say the 15. Obviously, the higher time frame, the more higher probability. I just like micro scalping. So let's say, so this is your 15-minute candle. This is your range. First candle is your range from the top wick to the bottom. You're waiting for candles to either break out to the downside if we're, starting to flip bearish, we're starting, a bearish trend in the market, or you're wanting to see a breakout up top, which means not a wick. If a candle wicks above and closes back inside of this candle's range, then nothing is broken out. You need a full break out of this range right here, like how this candle closed out of it. And then what you're going to be looking for is that third candle to come back in after this one closes. You're waiting for a candle to come back inside of that range it broke out from, which is what I call a POI. So this is a POI. And since this is a bullish example, you don't need the bottom one. This would be a POI if candles were breaking to the downside. This would be a bearish POI, and this is a bullish POI because candles are breaking up, not down. I guess I can make a bearish example with this bullish example as well. It doesn't really matter. We'll just say this is a bearish. This is the bearish example. This is the bullish example. So I'll just give this like a little tiny wick. And then we'll do this. Sorry. Boom. All right. So we're going to go over the bullish example. So if if candles are breaking higher, candles are closing outside of previous candle ranges higher, then you're gonna, this would be your first key level, the POI, the top of that wick that we broke out from. The second level is this right here. This is a draw on liquidity level. This is meaning a lot of take profits are going to be here, meaning there's going to be a huge move, possibly, not every time, but potentially there's going to be a big move in the market if price reaches there, and as well as here. This is a liquidity sweep level. Liquidity sweep. So the low of the candle that broke out of this candle's range is a liquidity grab / sweep. And the top of that candle is a draw on liquidity, which is where a lot of take profits should be at. So you have 3 levels. And you're waiting for price to open up, because this candle closed outside of this range and then opened up here. You're waiting for price to either tap into this, break back below to sell. And let me add these in here. Well, that's honestly, that's before we go any further, that is the least probability trade. The highest probability trades, which is one I took this morning, is a liquidity sweep. Highest probability is a liquidity sweep and a POI entry, or like where you're entering in the market. And I just target 1-to-1, so boom, we'll just do that. You want to enter in for a buy here after a break below this POI and break back above, or you want to enter in for a buy here after a break below, or if this candle opens up and sweeps the low like this and breaks back above, then you're wanting to enter here for a buy. Right here, just a 1-to-1. Let me line these up. Or if you're wanting to take a little bit of a riskier trade, still high probability, but a little bit riskier, if price opens up and ends up not going down first to these levels, it ends up going up first to this level, then you can wait for a break back below and take a sell right here. And I'll obviously be doing live examples too. I'm not just going to be doing this, very biased drawing right here, or either a sell right here like this. This is literally it. I'll show you the entries on what you'll be looking for, because the entries are super simple, but this is the basis of everything. And you can have this candle literally just wick into it. It doesn't even need to have a full break. Obviously, if it does have full break on the one, because before I break that down, I need to show you the entries for these time frames, on what time frame you need to be on for entries. So the 15-minute is going to be the 1 minute for entries. The 1 hour is also going to be the 1 minute for entries. 4 hour is 5 minute. Daily is 15 minute. And weekly, I'm just honestly going to get rid of that because we don't really need that to be confusing us. Let me make this like bigger, like 40. Yeah. Boom. So the 1 minute, I can go like this too. Let me make this even more simple, or better for the brain. Boom. So 15-minute, you're going to be looking for entries here. 1 hour, you get the idea. And like I said, this can be any of those candles. This can be 1 hour candles, 4 hour candles, daily candles, 15-minute. You're just waiting for price to reach one of these levels and react off of them. All right. So, and what was I going to get at? There was one thing I wanted to break down. Just, fuck, what was it? I don't know, but we'll get into this bearish example here. I think I'm gonna use this as like maybe a thumbnail. Yeah, that looks good. All right. So bearish example. We have this candle right here closing beyond that original candle, the first candle, because it's always three candles. The first one's a range, the second one's the breakout of that range, and the third one's the pullback into the range or into any of those levels. So that first range, or that first level that you want to see price to go to, is the level on where price broke out here. And then the other two levels are the top right here. This will be the liquidity sweep if you're bearish. So yeah, if you're bullish, the bottom of that candle that broke out is the liquidity sweep, and the top is the draw on liquidity where you want to see price go to. And then if you're bearish and candles are going lower, then you want to see or then the top of this candle is the liquidity sweep, not the bottom. And then the bottom is the draw on liquidity, and that's where you want to see price continue and hit there. So we'll put liquidity sweep here. And then the bottom, like I said before, this is your draw on liquidity. And you're just wanting to take a sell from that liquidity sweep. If we get a pullback, this third candle, if it pulls back all the way up, breaking above here and then breaks back below, we're going to take a sell there. Or if we just reach to the POI, which is most ideal, this is most ideal. POI is always going to be the strongest probability. Liquidity sweep is basically the exact same. It's still very high probability. It just means a lot of people either entered into the market or lost money into the market, which usually after is a very sharp move. So sell here, sell there. Oh, it looks a little bit stupid. And then a buy here. If that third candle ends up opening up, like I said before, and we end up price ends up pushing, like opening up here, and price ends up pushing to the draw on liquidity first instead of these levels, then you can take a buy from here. But like I said, you're going against that overall trend. So that is the least probability trade, is going against that overall trend down. If you're going against this and you're wanting to reverse the trend and buy, you can. I have done trades like this before, but I'm just, letting you know. It is not the smartest. Not the smartest thing to do. This looks crazy. But this is really all as you need to know. And then plus the entries, which we'll get into. Bullish example. And then we're going to do bearish. Gotta make the capital B. Bearish example. We don't need that to be capital. Bearish example, bullish example. Sorry, you can skip over this part. I'm just trying to get a few thumbnail examples for YouTube. And then I don't know if you hear that like movement up there. I don't know what that is. All right. All right. Sorry about that. I'm done making the thumbnail. I was just wanting to do this. All right. Now we'll get into entries. We are getting into entries. That is, I don't even know how to get rid of. I'll just do that later. But now entries. So what we're looking for now is when price returns to any of these levels, whether you're bullish or bearish, and you're getting into any of these levels. Now you're waiting for a wick into it. Can just be a little bit. It can just be a little tap into it with a wick, and then it closes back below, or it can break above it with a candle, close, break back below. You're going to be waiting for either an inverse fair value gap. Actually, we'll start off with candle range flip, and then I'll go into the more complicated stuff. So a candle range flip. Let's say this is a. Let's just say this is a bullish example. Bullish example. Oh wait, no, this is a bearish example. Let's say you're wanting to take a sell here. This just tapped into. Let's say this tapped into your POI right here. Let's say this was a POI. Candles tapped into it. Now you're just waiting for what is called a candle range flip, meaning it's the same thing. You know how I said there, there's the three different candles, and one of them's the first candle's that range you want to see getting breaking out of. It's essentially the same thing. It's just a candle range flip. So once price taps into your POI, you're just waiting for candles to start closing bearish. If this candle closed like this, inside of this candle's range right here, you're still bullish. A candle could just open up and go like this. Even though we closed back below the POI, we didn't break below or break out of that bullish range. So you're wanting to see a break out of this range. Let's say there's, just a big wick there or something, and then we closed here. So yeah, if this candle even closed like this, still not good. You have to wait till it actually closes outside of this candle's range. And then that's where you can enter. You can enter right here, put your stop above that candle, and then just, target a 1-to-1. And that's what I do. And then usually this plays out within a few minutes. And then let's keep this on the same POI level. This can be a liquidity sweep level. If you're bearish, this could be a liquidity sweep level or that POI level. That price is breaking, above and back below. Now let's say this is a bullish example, and we're sweeping the low of a candle or tapping into a POI. Boom, we have candles right here closing lower, breaking back into that POI. And because this is what happens a lot of the time. Let's say this candle was like this. Still haven't broken out of any range. We're still inside this one big one. Wait, no, this would be like this. All right. So right here, we finally broke outside of that range, all right? like I said, this is the 1 minute time frame. These are 1 minute candles because I'm doing an example for the 15 minute, but these could be 5 minute candles, tapping back into a 4 hour POI liquidity sweep, draw on liquidity. It could be daily 15 minute candles, but right now I'm just doing a 15. Just pretend these are 1 minute candles. So right here, this is that range that tap back into your POI. If we broke out of it here, so now you're waiting. Beforehand, you're going to wait for a candle to close above this range right here. If it closed outside of this range back above the POI and going from bearish now bullish, you could buy here. But instead, for this example, we continued to go lower. This candle didn't break outside of this candle's range, which, like I said before, a top wick to the bottom wick, and then we just broke out here. So we're still continuing bearish, and then now our candle opened up down here and did this. Or let's just say it's even like this, because it can just be any type of breakback above, even if it's this small. Boom, we broke back above here. Now you can enter there. This is where I would enter. Stop would be below that candle wick, targeting just a 1-to-1. So yeah, this is a bearish example of candles pulling back into a bearish POI, bearish liquidity sweep. And this is candles pulling back into a bullish POI or bullish liquidity sweep. All right, so that's the first entry. This is called a candle range flip right here for an entry. Now let's get into a inverse fair value gap, which I do not trade ICT concepts at all, but this is the one thing that actually does work a bit out of that strategy, and that is fair value gaps and inverse fair value gaps. All right, now same thing, same concept. Pretend this is a POI. Candles are pulling in, and let's say while candles were pulling into your POI, it created this gap in the market. Because this will happen. Let's say right here, this gap was created, which we'll get into what the gap is, sorry. Keep like thinking I'm just talking to people that already know how to trade this shit, and I'm not. Soon you will, though. Let's just pretend candles are aggressively going lower and lower and lower, creating barely any wicks, which they can. Like, they can create wicks, you know. Oops, sorry, my camera's in the way. They can be creating wicks like this. It doesn't have to be small wicks. It can be any size wick, but let's say in between these three candles that were closing bearish, there's a gap here, right here, from this wick to this wick. So from this candle that closed here, we had another one open up, push down, and then that third candle came up, but it didn't wick into. It's basically the same thing as what you're looking for on that higher time frame. You're wanting to see it, like on our strategy, you're wanting to see candles tap into this, because this would be a POI, or, you know, draw on liquidity up here. But this is a lower time frame, you know, 1 minute entry. So just don't get the two mixed up. This is just an inverse fair value gap. I'm just saying they're kind of alike in that sort of thing. That's why I'm saying these entries are literally like the strategy itself. That's why these specific entries go good with that strategy. You get what I mean? So right here, we have a bearish fair value gap got created because candles were aggressively closing lower and lower, and then ended up, this is how you know it's an inverse fair value gap. Because a candle could open up, you know what I mean, go like this, and then You know how you're back above the POI? Let's just pretend right here you're back above the POI and you closed right here. You don't want to take a buy there because a candle could just open up and then do this, respect this bearish movement down, this bearish gap, and continue that move down. Instead, you want to see a candle like this, or you can even wait for this. You can either wait, or you can either see this, a candle fully inverse that gap, break it back above. This would be your entry from the top candle to the bottom. I'm just not going to draw on wicks. Just wherever the wick would be here to the top, your entry would be here. Your stop would be below that wick, and then you would just, target that 1-to-1. But let's say a candle came up like this, it broke back above your POI, but it's still inside that gap. You're still going to want to wait for a candle to close like this, outside, inversing that gap and still above the POI. And then you can just have your stop below wherever the wick of this candle is. You can hold your trade for a bigger trade if you want, and you can have your stop down here, but I would just be keeping my stop here and just still targeting that 1-to-1. So that's a bullish example. So this is if candles are pulling back into a bullish POI or liquidity sweep level and breaking back above. Now it's the same thing for a bearish move. Let's say candles are pulling up. Candles are pulling up here. Let's say they're doing some like fuckery stuff. All right, now let's draw some wicks. Boom. Yeah, I need to move this over so I can see this, my bad. Boom. My camera was in the way. Boom. And now this is kind of more of like an actual example. Sometimes it will look as perfect as this, but this is what it'll kind of look like. Wait. If candle opened up here and closed like this, that means this candle would have to open up something like that, but don't matter. But still, let's just pretend, this is still doing this, and then boom, you start having candles closing lower, and if you, we'll take a second here. Where would the gap be in the market? You can pause this video and mark it out yourself, just like with your eyes, where the fair value gap would be in here. And if you don't know yet, this would be the gap. Because no price filled in this gap. No, the wick didn't come down to here and fill it in. Just did this. So let's say, finally candles are closing lower, and we close back below the POI. Obviously, this is a candle range flip, just like how I showed in this example. Candle range flip back above the POI. So you could take a risky trade and just take a buy right here, take a sell, boom, right here and catch a 1-to-1. Or you can be a little bit more extra safe, wait for that gap to get inversed, and then you can go for your sell. And then just have the stop, above wherever you want it. And that's the fair value gap to inverse fair value gap, because obviously if candles are closing higher, this is a bullish gap, so price could technically come down, respect this gap, and continue heading higher if it really wants to. It's when it's an inversed fair value gap, meaning price completely disrespected it, broke through it, and now it's starting to head bearish. And same for this. For this bearish example, price could have just came up here, respected this gap, continued to head down. You want to see an inverse, meaning it disrespected that bearish push down, and now it broke back above. All right, now there's one more example, which is a shift of structure. This one's going to probably take a second. To draw. This one's going to take a second to draw. But it's okay. It's not going to be too long. I just have a headache from drinking yesterday. All right. Wish I had some water down here. But anyway, let's say this is a bullish example. So price is pulling into this bullish POI. Candles are starting to close lower. And let's say, this took a little while for it to get there. So let's say there's candles here. It almost got to the POI level here. It still didn't tap into it. Started to make you think that it was about to, continue heading up, but instead we continued heading down. And boom. Now this is called a shift of structure entry. I forgot to label this, but this is an inverse fair value gap entry. So I can write this honestly down if you want to write. If you're writing this in a notebook, inverse fair value gap entry. And why these gaps in the market are really good, not just for entries, but for higher time frame. Because if your entry, let's say like for these entries, there's like a higher time frame bullish 15-minute gap. You have a bearish fair value gap here, right? And then you broke back below and inversed it above. But then you also tapped into a bullish gap, let's say on the 15-minute time frame or the 1 hour time frame. And you respected a bullish fair value gap on the high time frame, but then you broke back above and inversed your bearish gap on the lower time frame for your entry. We'll get into that later, but I just wanted to, I don't want to install your brain with too much random information right now. We're just going through entries. You got the basic, not even basic, that's literally everything I use. That strategy, that the whole entire strategy right here that we just went to, that's literally what I look for every single day, is what direction the 15-minute candles, the 1 hour, the 4 hour, and daily, which way they're closing, if they're closing higher, if they're closing lower, and if they're breaking out of ranges. Because sometimes they'll be, we'll go over this in live examples. But anyway, let's get back to the entries. This is a shift of structure entry. Shift of structure entry. It basically means that price created a structure point. Instead of just pulling back into a level here and breaking back below, like right here, doing this stuff like this, it ended up making some sort of structure, meaning it decided to do this, before finally getting in to your level, and then you finally break back above it. So right here, this is like you would mark off the candle by, this is where wicks don't matter. The shift of structure entry is not the wicks, it's the bodies of the candle. So candles are closing lower, you finally tap into your POI. Let's just say and this is where this entry right here will have usually everything. Usually you'll have, because you're trending bearish on that 1 minute time frame. Let's just say you had a bull or a bearish gap here that you inversed, and then it just had a candle range flip. You know what I mean? Like right here. We broke outside of this range that tapped into our POI, broke back above it, and then a shift of structure. Because this is not a shift of structure. If you open up here and you close here, you're not breaking above that structure point. You're still underneath it. So you would want to wait for price to break above that structure point, which I can do. I'll show you on live examples. I know the drawing's a little bit weird, but it's just candles are going down, not cleanly. They're creating little structure points, and you're wanting to wait for that structure to finally shift from either bearish for a bullish entry, or if you're wanting to do a sell, then you're gonna see candles creating bullish structure into your POI. Actually, I'll do this. We'll do another little example right here. Oh, that candle looks kind of funny. So yeah, you're having candles doing bullish structure into your POI. Instead of just cleanly moving, one way and giving you your entry, it's kind of chopping around, getting into your POI or liquidity sweep level finally. And you can end, like I said, you can enter here. You can enter after this candle, flip this candle's range, and if there's a potential, bullish gap here that it inverses, you could enter there, or you could wait for price to break that structure. Because right here we're slowly trending up, and you're waiting for it, doing a bullish trend up into your bearish POI. You can wait for price to break that bullish structure trend and break the structure, closing bearish finally. Because right here we tapped into the POI, broke structure. Now we're not in a bearish trend for this bullish entry. We broke structure, so now we're bullish on the 1 minute entry with our higher time frame. And then same for this, we're having bullish structure and we're wanting to see prices go from bullish to bearish on the lower time frame. So we're going up, shift structure, now we are bearish because we broke our structure, the bullish trend. And you can enter there, and just the same thing I was saying before, you can enter here, have your stop just above this candle right here if you want. That's what I would be doing, having my stop above whatever wick was created, and then just going a 1-to-1 with it. Or you can have, like I said, or you can have your stop all the way up here. It doesn't matter. You're just gonna, if you're doing that, you're gonna be in a trade for way longer than you want to be. That's all you gotta really know on that. All right, we got the 3 different entry types, and then we got the strategy down and the entries. That's all you need. That's all you need to think about. Just a strategy and an entry model. We have 3 simple entries, and we have a simple strategy. Just needs to be simple, and then you put them together off of entering off of levels. So now let's go to my actual trades we took today. Let's get into some live examples. So right here, maybe I can take a trade with you guys. Maybe, because we just had the 15-minute candle here close. So now these are 15-minute candles. Let's go on to the 15-minute time frame. And if we go on, let's start from the daily, because this is what I do. I'll go on the daily, right? Oh my god, I gotta get rid of all this stuff. Hold on. This will take a second. I just need to get rid of, just so I can, show you guys the actual chart without this stuff being in the way. Alright, that's good enough. I'll go on the daily, right? See if candles are closing lower or higher. So the week just ended, so now this is when I'll look at the week and the monthly. I only look at the monthly and the weekly time frame when a new candle opens. Meaning, today's March 2nd, so this monthly candle just closed, and we closed it bearish. So we just closed bearish on the monthly time frame, because this candle right here, oh wait, no, we're still in a bullish trend. See, I almost fucked up there. We're still inside of this bullish monthly candles range. We haven't broken out of this yet. We've been just kind of chopping around inside of this candle right here. Because this one right here closed beyond this candle's range. And then now we've just been chopping around in it. So technically we're bullish on the monthly still because we haven't created a new POI, a new level on the monthly because we haven't broken out of this bullish range. So if we go to the weekly now, the weekly candle, the new one just opened up. This was the previous one. So right now we are technically, what are we? Sorry, I'm getting a little bit lost here. So yeah, we were inside of this range right here for quite a while. We were inside of this range. And then we just broke out down. So now this right here, this one big long candle is your new bearish range. But since we're bullish on the monthly, I'm still bullish. You know what I mean? We're bullish on the monthly. We're bearish on the weekly because we're inside of this bearish range. So if I see a candle on the weekly now start breaking higher, like let's say, I don't know why this is like glitching like that, but let's say this weekly candle closes like this, and then the next one breaks out from that range. I'm still gonna be continuing bullish. Now look at the daily. The daily is still inside of a bullish range. And I'll show you right here, because this is the boom from the top wick right here, top wick to the bottom wick. We have not broken out of it yet. Actually, technically we are actually still inside of this range right here. Believe it or not. Look at this. Yeah, technically we're still inside of this range right here, and we've just been chopping around. But you get what if you're slowly starting to get what I mean, you just want to go on the monthly when a new one gets created, the weekly when a new one gets. So monthly time frame you can look at once a month to see what trend it is. Weekly you can look at it once a week on Sunday or Monday to see what the previous candle, how it closed. Go to the daily. Once a day, I look at the daily time frame every day to see where the previous one or yesterday's candle closed. So right here, and I think we're about to close super bullish, and maybe even break past this candle's range. And then we go to the 4-hour. 4-hour candles are clearly just riding higher, just closing higher and higher. Which this was a part of the trade I literally took yesterday, because look at this candle right here closed beyond not only this candle's range, but also this one. So we have two POIs. And if you don't know what a POI is and how to identify them, because this is one POI here, and this is two POIs here, because this candle closed through two candles. So this third candle, the one that you want to see have its pullback, can pull back either into this POI, or like it did, just pull back into this POI and move up higher. Obviously, if this candle right here kept closing higher, then this would also be a POI. Oop. So let me, and this is how you'll know if a POI is good or not. Let's do this example right here. Right here, so this candle this one right here, this is a good example. This one closed beyond this candle's range. So you have a POI right here, and then your liquidity sweep level is here, and your draw on liquidity level is right here. Those three levels, but we're just focusing on POIs because the draw on liquidity. The liquidity sweep level and the draw on liquidity, you can't fuck up. It's just the top and bottom of the candle that broke through that range. POIs are a little bit more difficult because you can have multiple. So right here, we close beyond this range. This POI wouldn't count because it already got tapped into by this candle. This candle already wicked past this POI. See how it hits right here? So this would be invalid. This POI would be a valid POI because it goes straight to that candle that this candle broke out from. This doesn't hit any wick. Like, let's say this wick right on this candle is down here. So this would not be a valid POI because it already taps into this candle's range. You want to see the POI tap only into the candle that broke out from that range. And then obviously this one wouldn't be valid either because look it taps into here. It's not like it just smoothly goes across into that candle. It doesn't. It hits into here. You want to see your POI just go, not have anything in the way, just drag it across and hit that candle that closed beyond, or that closed below or above your candle's range. And then you're waiting for that third one to tap back into it and break back below. Sorry for repeating myself so much, but I really just want to get this broken down as smoothly as possible. But all right, so 4 hour, so the monthly bullish, weekly bearish, daily is not really anything. There's no POIs on the dailies. Like, see how there's nothing going on. There's no active POI that you can mark off. There's a top and a bottom. You know, like I said, there's a top here and the bottom of that previous candle, technically, so you can look for a liquidity sweep or a draw on liquidity to either sell or buy. But 4 hour candles closing higher. Daily, nothing. Weekly, nothing. And what I mean by nothing is there's just no candles closing beyond other candles' ranges. So there's no POIs being created. So there's nothing really going on the daily or weekly. Nothing really going on the monthly. We're still inside of this range. Oh, wait, no, there is. There's a bearish POI right here that we're already breaking above. So we're above this bearish POI here. Until we're below that POI, that's when I would be wanting to see candles flip bearish and to see some sells. But we're on NQ, and I only trade things that are mainly bullish. So sells are rarely, I mean, they're there. They're there all the time. But not as much as buys because NQ, ES, NASDAQ, S&P, gold, silver, they're mainly a bullish thing. There are things that are always going to be more just rising in price, getting less and less of silver and gold. So the value of it's going to be going up. But anyway, let's just go back into these. So 4 hour closing higher, 1 hour was closing higher because I took these trades at around 8, 9 a.m. Go down to the 15 minute, candles are closing higher, and right here. So right here, I came onto the charts around 8:45, saw that this 15-minute candle, and like I said, we already went through all the higher time frames. We're looking for a bullish market. We're looking for buys because all the 4 hour. Usually, I don't even look at the daily. I look at the daily, like I said, once a day just to see which way it closed. I look at the weekly once a week and the monthly once a month. I don't really look for their POIs. Sorry for getting that into your head, marking off POIs on those higher. I really don't mark off POIs on the monthly, weekly, or daily. I only mark off POIs and levels on the 4 hour, the 1 hour, and 15. I just look at these higher time frames to see what direction they're closing. But the 1 hour, the 4 hour, right here, because I got on at 8:45 and that 15-minute candle closed, so a new 4 hour candle opened up. And right here, no wait, that's the 2 hour, my bad. Right here, this 1 hour closed beyond this 1 hour candle range. 15-minute closed beyond this candle's range. So like I said before, this would not be a POI because it already hits into here. It doesn't go smoothly into that candle. So we have one POI here, and our first entry, if we go down to the 1 minute, is the fair value gap entry. Right here. And a candle range flip, and this is, I could have not taken a loss if I waited for all three to happen. Because look at this right here would be the shift of structure entry. I would have to wait for price to break above this, meaning price was trending bearish, and I should have waited for a shift of structure to buy. Instead, I bought after this right here, this inverse fair value gap. There's a gap right here. Right there. So there's a gap right here. And then there's a candle range flip, because this was your bearish candle right here. And instead of this candle closing inside of this one, it kept closing lower, making this your new range. And we ended up inversing that gap, flipping that candle range from candles closing bearish to bullish, back above our POI. So I entered right off of this, and which is riskier, because if you have structure, then this is what I mean, because right here, this really isn't structure, which I'll get into that after. But when you're having clear structure like this, you're going to want to wait for the structure to be shifted, not just entering in where I did, because I've been trading forever, for about 3.5 years so far. So I'm completely fine taking these little bit of extra risks in the market, not waiting for it, because we already had two of our entry models tap back into our bullish POI, broke back above. We entered there, ended up taking a loss because I didn't wait. This is what I mean. You got to know when you're taking a trade, you got to know why you lost. Because it's rarely ever, it could just be the market not wanting to play out, but a lot of the times it's because of what's going on with you. And like I said, I didn't wait for another candle to break back, shifting the structure. I just got in early right here, which I should have waited for that structure to be shifted. I didn't, got in early, took a loss for that. And then that 15-minute candle closed, and guess what? This is going to be a nice little good key information thing. Because right here, this, like I said, this was the candle, and then that broke outside of this range. So this candle was pulling back into our POI, and we got our entry for a buy. It ended up closing like this, taking us out, but we're still inside of that bullish range, right? So technically, this would still be the liquidity sweep, and this would still be the draw on liquidity, the top of this candle and the bottom, because we're still bullish in the market. It's not like this candle ended up closing below this candle's range and ended up staying inside of it, and then the next one opened up, which, let me just mark this off, because this was our first trade. This was the first trade candle, or at least this candle right here broke beyond this candle's range. So you have your POI, and then this is the liquidity sweep level, and this is your draw on liquidity. So candles could have easily just kept going down, and I could have entered right here. Instead, we just, we pulled back into that POI. Let me get rid of these. And then, yeah, this is where you want to see price continue to go to, is that draw on liquidity, like I said. But then that candle closed, we ended up losing that trade, and then that candle ended up closing like this, still inside that bullish range. So now, since not a new POI was created, since there was still price hanging around inside of that range that this candle broke out of, because candles didn't continue closing higher and higher or lower and lower. They just decided to stay inside of this range that broke out from this range. So you have this range right here that this candle broke out of, creating that POI. This POI is valid until candles start closing higher and creating new ones. So now this POI would not be valid anymore because this candle right here closed higher, creating this new POI here. So a POI is valid until a new one is created, either a bullish or a bearish one, because we could have had candles, close lower like this. I'll do a little example. If this candle right here closed like this, now you have these as your POIs. You get what I mean? And now this would not be valid anymore. But like I said, POI is valid until a new one's created. And let's go back to the wait. We got to mark this off. So right here, the bottom of this candle, because this is the new candle that was created after the one that broke outside of this range, which we took our loss on this one. But then, and since we're bullish, the bottom would still be the liquidity sweep, and the top would be the draw on liquidity. And so let's go down. Oh, ZDOL. I don't know what that is, but DOL, draw on liquidity. Boom. We can get rid of this right here. And this one was kind of a, because I was like, the doctor came into the room and I didn't want to miss out on this buy. I took a very risky trade right here. Basically, there was 0 entries going on here. There was literally no entry. This candle right here closed, beneath our liquidity sweep level, which this is the wick that was of the previous 15-minute candle. So, oh my god, I keep forgetting that this will just spawn me to a bunch of random places. But right here, when this candle closed bearish, that was that wick. And then let's go to the 1 minute. So yeah, this would be your level. The bottom of that 15-minute previous candle. And then the next one opened up, broke below that liquidity sweep level. And like I said, that previous POI is still valid because no new ones were created. Which, as you can see, they literally play out perfectly. See how price broke above it here, came back in, inverse the fair value gap, could have entered here, caught a buy somewhere there. But, yeah, right here. Sorry, I gotta stay on point. But price came back in, and I entered right after I saw this candle have a huge push down and break back above and close like this. There was no shift of structure, no inverse fair value gap, no candle range flip because we're still inside of this bearish candle. And I just decided to enter in right here just because the doctor came in and I didn't want to be trading while he was there. But the next 1 minute, literally 60 seconds later, we broke out of that bearish candle range. So you could have even gotten in right here with your stop below this, or even at the liquidity sweep to catch a 1-to-1, anything like that. But I was in and out of this trade within 3 minutes, I guess. And because I wasn't watching the charts, it took 45 minutes to do all that stuff. And then I came back and I saw we hit our take profit within 3 minutes. So that's pretty awesome. Now I can get rid of these. But yeah, that's a live. That's I really don't know. I guess some things I can go over is if your candles are closing lower, like this was, I think this was my trade last week I took. Candles are closing lower on NQ, and this is only for NQ. This is for nothing else. NQ is a very quick market. So on NQ, if candles are closing lower, let's say your POI is up here because this candle closed beyond this candle's range. you can literally enter off a quick pullback. And this is only on NQ during market open at 9:30 a.m. Eastern Standard Time. For me, that's 8:30 a.m. This is only for that time, for that first like 30, from 9:30 to 10 a.m. EST. In that 30-minute time frame, because this is what, yeah, this is 8:30 to 9 a.m. for me, and that's 9:30 a.m. to 10 a.m. EST. So if this candle's breaking lower, or if candles are breaking lower and you're not getting a full pullback into your POI or any of the levels that I have marked out, you can just use an entry signal and take the sell on NQ during market open the first 30 minutes. So right here, this was really the exact same trade I took. Where is it? So basically, candles were closing lower, and where was this? Right here. So literally the 15-minute candle closed, right? That previous one creating that range. Or no, because this is oh my God, I'm fucking myself up, sorry. So this candle right here closed beyond this candle's range. And let me go back to it right here. So this is 9 a.m. Right here, we didn't really even have a pullback. We did, but it was so quick and it already happened where I got in the second the candle like opened. So basically right here, we had the pullback and candle range flip right here before the candle even closed, and I entered in right here, and then a new candle opened right here. A new candle opened right here and then created a little wick and just continued lower, and I caught like this right here, a nice little one-to-one trade like this. But yeah, this is only on NQ. If you don't get a full pullback into your POI, you can just take a quick sell if you want. Like right here. Like this right here, it didn't fully pull back into any POI. It just ended up, candle started flipping lower, and you could have caught another sell here. And then, yeah, there's like some other things I could get into, but I really want to just leave it at that because that's literally the most perfect, everything you need to know for a super high probability setup every single time. Super mechanical, you're looking for the exact same 3 entries, one of the 3, every single day. Looking for the exact same thing, just what candle or what direction are 15 1-hour, 4-hour candles, daily candles closing in, and you're just wanting to go with that trend. If daily 4-hour and 1-hour candles are closing higher, you're going to want to wait for 15-minute candles or 1-hour candles to start going with the trend of that higher time frame. So if daily and 4-hour candles are closing higher, you're going to want to wait, ideally, for 1-hour and 15-minute candles to start also closing higher if they're closing bearish. You can take the sell if you want. That's pretty risky, but you can take that sell if you want. If candles are closing higher on the time frame, but you're seeing some good sells on the 15-minute or 1-hour, go ahead and do it. But I would wait personally for candles on the 15-minute to start going into that higher time frame trend and start closing higher. And same for bearish. If daily and 4-hour and 1-hour candles are closing bearish, wait for the 15-minute candles to close bearish. Be patient. You know what I mean? I've been trading for a very long time, so I'm completely fine taking those little bit of, those little risks in the market. But yeah, I think I might take a trade with you guys here, to be honest. I might use the bathroom real fast, but so what did I go over? I went over how NQ only during market open, you can just wait for a tiny pullback in your entry signal to take a sell or a buy. You don't have to wait for it to fully pull back into the POI. And what else? I told you about extended POIs. Just an extended POI is meaning that no POI was ever, a new one was ever created. That's why I said that POI that was still valid, that's an extended POI because no new POI, no bearish POI or no new bullish POI was created. That POI is still valid until a new one is created. So there's that. And that's really about it. Yeah, I literally went over everything. That's everything. That's everything that I know that I use every single day to take my trades. Every single day. That's really what okay, sweet. I was just making sure I went over everything. So yeah, just rewatch this video and the entries, the strategy, that part I went through just every single time. Or not every, just rewatch it a fuckload of times and you should be good. But let's get into NQ. Look at this. So, and this is the little indicator I use so I don't have to switch between all the, time frames. Look at the daily. The daily has been pushing up. 4-hour candles are closing higher. 1-hour candles are closing higher. We did just close bearish here, but like I said, you want to wait for the candles to flip in the direction of the higher time frame. And look at that. A lot of people probably just sold. Like, let's say a lot of people probably entered for sells right here, trying to capture a sell in the market, and they just got stopped out because they weren't going with that higher time frame trend. And now, this candle, some POIs were just created. Let's go to the 1 hour. Look at this. This 1 hour closed beyond this range here. So right here you have a POI here. And you have a second POI right here. They're very close together, but you can just mark them off anyway. So you have two POIs. And none on the, well, yeah, these are still active or still able to be used because no new POI was created. This candle right here closed beyond, and there's a third one right here, but these are so close together, I'm not even going to mark this one off. But this candle closed beyond this candle's range, so you have a POI here, which I can mark off. POI here, so you have one on the 15-minute, a POI here, a POI here on the, and then two POIs on the 1 hour. Which is, a POI is just a point of interest, a very specific level in the market. And then, since this is bullish, this isn't really a good example, but technically the bottom of this candle right here would be your liquidity sweep, and this would be your draw on liquidity up here. But since the liquidity sweep level, which is the bottom of this candle, is so close to these POIs, I don't even need to mark it out. Your liquidity sweep on the 1 hour would be all the way down here, which I'll mark off just to make this, not confusing. So boom, you have your liquidity sweep level on the 1 hour. You don't have any on the 15-minute. You have your draw on liquidity here on the 1 hour. Draw on liquidity. And then can make these, perfect. Line them up. And then, this right here, this wouldn't be a liquidity sweep, and this wouldn't be a liquidity sweep because this is 4 candles ago. So the liquidity sweep would be the bottom of the previous candle, the candle before the one that just opened. So yeah, now you're just waiting for candles to tap back in to any of these levels. And then you're just waiting for a break back above. And like I said before, this is that liquidity sweep. So we just swept liquidity right here. And now we're about to break back above 2 1-hour POIs. This down here is the 1 hour liquidity grab. And yeah, I'll take this trade on my Top Step account. Just if we end up getting the entry. Sorry, I'm reposition. I'm picking up a new chair today because this one is just so fucking uncomfortable. And right here we have a fair value gap. Look at it. We have our entries. Have a fair value gap right here. That's above our POIs, so we want to see this get inverted. And then we have this bearish candle range right here that we're inside of, so we want to see that get flipped, plus inverting this gap. So we'll see if this happens. I will probably trade, what, how many is that on here? Let me pull up. I'll probably just do, because I don't really like trading at this time, I'll just do 4. There's 20 seconds left. Let's see what happens. So, yeah, so this is that bearish range, so we're still inside of here, and then that's that gap. And it seems like we are about to take this buy, I think.
Order filled.
All right. So yeah, I guess I'm not really risking too much, so I'll just have this down here and this up here for a 1-to-1. Usually my end, they're way tighter than this. Like I would already be at like my so yeah, this is how quick I trail. I'm already about to trail my stop because we're just pushing up. And yeah, so we are, and that's the thing with my risk management. I always keep, right when price trades 50% into my take profit, I always move my stop to break even. So 50% is right here. 0.5 out of the 1-to-1 is right here. We traded 50%. So, and this is the candle here. Yeah, we might even get stopped out here because we just completely switched back from being, but I do not care. Like I said, if we already trade 50%, then there's no reason that you should take a, oh my goodness. Well, we made $5, but this is probably gonna hit take profit still. I mean, to be honest, but right here, my stop would have been right here because this is the candle that holy shit, what is going on? Oh my god. I don't really care about all this, but right here, 1-to-1. Look at that. See, this is why I put my stop to break even. We traded 50% into our take profit, almost hit TP, and then completely reversed. So right here, this is the 1-to-1 trade. I can actually just break this down better on the trading view charts. So right here, price pulled back into our levels, broke back above, inversing this fair value gap, flipping out of the bearish candle range, and there's no structure, just candles closing lower, so there's no structure to be shifted. We also had a liquidity sweep because, like I said, that previous 15-minute candle was so close to these POIs, so it doesn't really, the POI, like I said, the bottom of this candle was the liquidity sweep, but it's so close to the POI that you don't need to mark that off. You can just keep it as there. But we had a liquidity sweep on the 15-minute, tap back into the POI, candle range flip, inverse fair value gap, or a bearish fair value gap that got inversed. We entered in right here. Stop was below this candle's wick, and then our take profit for a 1-to-1 was right here, which it almost hit. Was so close to hitting. And like I said before, if the second I trade 50% into my take profit, meaning 0.5 like this, my stop gets moved to break even immediately, and then I just let it play out. And that's really about it. That was a live trade for you guys, live example on just my whole strategy, what I do every single day. The exact same thing. It cannot get more mechanical than this. There's no emotion behind it. I just saw the same thing that I look for every day and I clicked buy or I click sell. Just the same thing. But I think that's going to be it for me today. Let me open this up. Hopefully that wasn't too long. Oh my god, an hour and 20 minutes. All right, well, I hope you guys have a good day. I'm sorry if I repeated myself a lot. If you want, join the Discord to trade with me daily. Trade with me in my community daily. There's like 70 people in there. We're getting close to 200 subs. That is pretty fucking crazy. So that is awesome to see. Follow me on Instagram and Twitter if you want, because I stay really active on there every single day. And what else? If you want a month off of TradingView, use my link in my description to go get $15 off a month there. And go check out OneFunded, get 15% off all their evals. Soon I'll have affiliate links with Top Step, Lucid, Apex, and Alpha. Right now I don't. I gotta work on that. But yeah, thanks for watching. I hope you guys learned a lot from this. Please let me know down in the comments if you'll use my strategy or if it works out for you. Go join the Discord, like I said, and send your wins or losses that you take using my strategy. That's what I do daily. But yeah, thank you. You guys have a good rest of your day, your night. See you in the next one.